Well, our last two guests were talking about the importance of social media, weren't they, in this referendum? It has been huge. The hashtags have been used so many times, if I can get my words out. Let's talk to Victoria Fritz, because she's far more across all of this than I am, because she's in our social media hub. Just give us a sense, Victoria, of what's being said, what you're picking up on there.
Hello, Jane. Yes, all day we have been hearing reaction from businesses both here in the UK but also abroad, because financial markets and the larger institutions on the whole issuing a little bit of a sigh of relief that Scotland will not become an independent country. A lot of those uncertainties obviously have now disappeared. Well, the European Council President, he tweeted, "I welcome the choice of people of Scotland. The UK is an important EU member benefiting all citizens and member states." Well, of course, there was a question mark over whether an independent Scotland would be able to be accepted into the EU and could adopt the euro. Well, moving on, Richard Branson, the entrepreneur, he's currently one of the most influential accounts on Twitter. He tweeted that the Scottish people should be proud of the turnout in the referendum. A great example of democracy. Of course, the turnout was more than 90% of the electorate casting a vote in some areas. But of course, thoughts are now already moving on to where this leaves us economically. We can look at what's happening with the credit rating agencies, because the major ones have said that the result doesn't actually change the outlook for the UK in their view. A potential Scotland tax change does not threaten the UK rating, they said. Now, earlier on, there was a rally in stocks, but also in the currencies, with the pound hitting a two-year high against the euro and also a two-week high against the dollar. Those gains have actually pared back a little bit now because traders are booking a profit and selling their positions. Well, look at this. This is from the global head of dealing at London and Capital Asset Management. His name is Steve Collins. He tweets, "Classic buy on the rumour and sell on the fact." Well, on the floor of the dealing rooms in London, many traders were doing a sterling trade yesterday, trade of sort of almost an entire day and 2 hours overnight. But they too are already moving on to the next story. We have this from World First, and we get to do this all over again in 8 months' time for the general election. Just think about that. Let's take a quick look at the market, see what's going on at the moment. I believe the stock market in London continues to be up. The Royal Bank of Scotland shares continuing to rise. We, of course, have had those contingency plans to move the registered head office south of the border in the event of independence. Its contingency plan is, of course, no longer required. Other bank shares also rising, Lloyds Bank rising too. The pound is veering off just a little bit, tackling a new complexity, because what will those devolutionary powers really mean? Will business in the UK become more complicated? So, in summary, relief, but not euphoria. Echoing the words of the Royal Bank of Scotland, it's back to business as usual. Jane.
Well, maybe in some quarters. Thank you very much, Victoria Fritz. Thank you.